Hey, guess what? We are back and welcoming you to another wonderful winning Wednesday. Guess what, folks? We had a fun time in traveling, but when you travel and you go through many different time zones like we did, it's always tough settling in, and then it's also tough getting back and settling in again. So,
Yeah.
yeah, we went to France, we went to Amsterdam, we went to South Africa. We spent time, most of our time in Botswana, just enjoying the people. I would say enjoying the food. I would say my wife had an opportunity to get access to all of her delicacies. Tell her- tell them about what was it that you missed the most about being home, Eunice.
Yeah, welcome everyone. It's good to be back. We missed having this. We missed having our Wednesday chats. So it was good. It was good to be back home after quite a while. And the most I missed is just family, just spending time with family and friends. And of course, it's always great whenever there's family or people around, you always have a meal. You always partake in some type of meal together. So it was good to have some of my traditional meals that I don't have access to here. So it was great. It was good to have those meals and childhood candies and things of that sort. So yeah, I'm happy that I got to have a bit of that.
No, and for what we're sharing with the audience today is this is our topic for today. Funding your business in a high interest world. Let's talk about some creative alternatives because even from a real estate perspective, the market is changing, right? Interest rates have come down, but where are they today? They're still in the sixes.
Yes,
They're
high
still in
sixes.
high sixes. So if that's with something that's secured by an asset, if you were to have a conversation about something that is not secured by an asset, you're probably talking 10, 11, or 12 if you wanted to go out and secure a business just using you know, unsecured credit, right?
Mm-hmm.
So in this high interest rate world, what is the conversations that you're having with your clients as they're looking to purchase new homes?
Well, the one thing really about looking at the interest rate is that when you talk about ownership, home ownership, you are talking about 15 years, 30 years of payments. So
Mhm.
while it is very important to still look at your interest rate, it's also not the end of the world, right? So you get in at 6.5 or 7%, there's an opportunity that if interest rates go down, that you could refinance. So I tell my clients, don't focus more on, oh, the interest rate is high, because at the end of the day, the interest rate is also high on that rental that you are staying in, and you're still paying the mortgage for that landlord. So don't focus more on just the interest rate unless there are other things going on, but don't focus on just the interest rate. Um, Plus, there are other alternatives, yes, that you could get money from if you do have those alternatives, and if those alternatives are funded sufficiently to be able to fund you purchasing your home through. So there are options. There are options, but if you're going to go with a mortgage lender, yes, you are going to be somewhere middle six or up to close to sevens, and that's where the interest rates are right now.
Now I see 6.58 in the articles that I have read. But from a business perspective, as a business owner, if you're having conversation with another business owner and the interest rates today are where they are, I'm just gonna, on another tab, just pull up, just do a quick Google for unsecured business loans,
Hmm.
and I want to see what the rates are there. How would you advise that business owner to go about looking for purchasing? What advice would you direct them towards right now?
Well, if you're looking right now and you don't have any other option, I really don't know if there's anything else but to just go with that. The other options that other business owners that I'm able to have conversations with who have insurance policies, this is a great time to tap into using those because those still have a relatively lower interest rates. I know one specific one that its interest rate was still at about 4.5%. Now, if you do have a policy, a customized cash value life policy, you may be able to tap into using those funds for whatever you may be needing for your business at that more affordable interest rate of 4.5 versus what is it now versus whatever it is right now. So this is one of those times when we have conversations with business owners, and I say to them, this is why it is important to make sure that you set your business up for times like these. If you have a policy that you've had for several years, you've by now accumulated sufficient funds to be able to tap into. However, if you don't have that as yet, it's still not late to do that because you are able to still start up a policy today, and depending on how we structure it and how we fund it, you may be able to tap in and use those funds in a couple of days after you have actually started that policy. That way you are able to pull money out of it at those cheaper rates. What are
No,
you finding that you are having to, either advise or direct clients to who are looking for alternative funding as well?
yeah, that for me, there would first be going to the places that have the lowest cost of capital.
Hmm.
And the lowest cost of capital right now would be working with some of the government entities, such as the Small Business Finance Authority. Usually, there is a capital arm for supplier diversity in each and every state. And last we looked at it, is if you were a veteran, they were offering rates about 3, 4, 5%, which is unheard of in this particular market. But I just pulled up bankrate.com, and it's saying for an SBA loan, which I was a little bit shocked to see this number, but for an SBA loan, it's saying that the floor is 13% to a high of about 16%. And if you were to go variable on the SBA loan, that's going to be between 11% and 14.5%, right? So that is pretty costly capital. Over here, it mentioned that a business bank loan is going to be at 7.31% to 7.6%, 7.61%, and that's going to be on the average, right? So right now, the cost of capital is very expensive if you are a small business owner and you're looking to either, stabilize or grow your business. Those are the rates that you're dealing with. But this is one of the reasons why we have communicated time over and again that for those individuals who are building their business, this is where an insurance policy comes into effect, because that insurance policy is going to be able to be another lifeline that you have should you need to tap into it for working capital, equipment purchases, or just other operating concerns that you need for your business. And similar to, it's always an insurance conversation. It's like you do these things that you have to do to prepare your business for when you don't really need it, right? You purchase insurance, right, for the ultimate, right? If you aren't here, that's a worst case scenario. And we also talk about building out your business credit, and you build out your business credits so that you build out your business credit such that when you need to access it, it's available to you. It's not something that you wait for. If you wait for it, guess what? You are already too late if you're waiting for it. And if you don't know where you are, this is why I love to have that conversation. The conversation that I love, and we offer a service for $99, right? The service that we offer is for $99. We're going to pull your business credit report from Experian. Of course, I need to have your permission in order to do something like that. But we are also tying in the fact that we're going to give you a 30-minute consultation where we can review your credit report and tell you where you stand today, so that way you can take corrective action in order to move forward, right? Many have taken us up on that offer, and at least they have an idea of where they need to be, and they're not flying blind. I was thinking that when we offered that service, that many more people would be, lining up to have conversations with us. But, it's a different time, it's a different season. We're coming off of summer, and now people are probably, putting their heads down and ready. So
Yeah.
I am seeing an uptick in that as well. But I wanted to throw something on your table as well, Eunice. Um, I watched a video the other day, and it was talking about seller financing of the business, right? Um, are you seeing any creative things going down in the real estate space with respect to seller financing on any deals that are out there?
I have not seen anything along those lines. I can say I see that properties are staying longer on the market.
Uh-huh.
The market have really shifted. It's also around August, it's also a slower month, only because you have back to school stuff. So most people are pretty much trying to settle the families in and all that type of things. So even historically, August has never really been a busy month. So we are seeing and experiencing that in the market. A lot of times when that happens, it doesn't necessarily mean that sellers would be open to seller financing or other creative options. What I see more is either sellers offering some type of assistance, whether it's closing cost assistance. I've seen a couple of or many price reductions. I've seen others completely taking the properties off the market, and I believe they'll wait until maybe the next year or next time when they think or when they believe that the market has shifted. So within residential, there isn't a lot of creativity when it comes to financing of homes. It's different when you come to some level of commercial, especially the family owned ones where there might be some room to have some type of seller financing, but I don't see a lot of those, especially around us where most commercial properties really are institutional owned.
No,
And
and I
then
agree. Go ahead.
And one other thing that I wanted to drop in before we pass on this one, when we were talking about um, rates for businesses to get business loans and things of that sort. One of the most important things that most business owners also have to be aware of is that some of these rates, as you see them published, that's if you have good business credit, if you do have even business credit, right? This is why, going back to what you were saying, the importance of making sure that these things are done before you need them, right? So if you do not have business credit as yet, that means that these lower rates, you may not be able to get them. You may not
Mm.
even get the funding because you haven't yet established that business credit. So you being in a position where right now you are in, you need funding, if you opt to right now focus on establishing that business credit, it may not give you the results today, which is the result of getting a lower rate today. However, you will be preparing for tomorrow because you've missed the ship before. Don't miss the ship again and again and again, right? So the at the basis of it, or at the foundation of it, is that ensure that your business has established business credit, and that when you go out there and start filling out applications for some type of credit, you are already established, and they can use that record to help give you hopefully a better rate than what you may have gotten without a business credit.
No, I'm trying to help as many small business owners make it to that 5th year anniversary that is so elusive to so many, right?
Yeah,
So
yeah,
elusive to so many, and that's the reason why we jump on every Wednesday. Not only because it's a wonderful winning Wednesday, but just because we care. We want people to have access to know and not be flying blind. That's the reason why we continue to develop our website. That's the reason why we continue to develop our social media. That's the reason why we continue to develop our our newsletter, right? And we're trying to help as many small business owners as we can to enhance their credit profile before they actually apply for loans so that they can get the best terms and also the highest limits, right? And there's many different ways that we can go with this. We talk about things from a real estate perspective. We talk about this from a small business perspective. We talk about this from a coaching perspective, right? We're just really trying to advocate on behalf of the small business owners to not only to survive, but to equally thrive at the same time. So,
exactly.
it's the first time we are back. We will be back again next week, and hopefully in our absence, the audience was able to miss us just a little bit. But I don't want to be too long-winded, especially since we did start a little bit late. But
Yeah.
next week, the topic that we're going to be discussing, since now we want to bring a little bit of order to where we are. Next week, we're going to talk about how to stay compliant while building business credit, right? We're bringing different topics. We have more order to what it is that we're bringing. And next week, we're going to have a conversation about how to stay compliant while building out your business credit. So I
That
have
sounds
nothing.
interesting.
It's a very interesting topic.
Yeah.
As a small business owner, I have learned more than I ever thought that I would ever want to know or need to know around small business and business credit, right?
Mm.
One of the things now that what we're doing is staying compliant, making sure that, if you are an LLC, you are staying compliant. If you are a corporation, you're staying compliant. You're not commingling your personal resources with your business resources and creating a nightmare of chaos in that particular space. So I just wanted to share with the audience what we're going to be talking about next week. And, I'm usually the one who's carrying on and talking too much. So I'm going to say my goodbye and leave it over to you to have the last word.
Yeah, thanks for having us, and thanks for being with us again today. And as we spoke, there are a lot of creative ways in which businesses can actually get funds in this high interest climate. There are many creative ways. The best way is always to reach out to somebody, reach out to people who are in the business, reach out to us. We may not be lenders directly ourselves, but we interact with a lot of lenders. We are business owners ourselves. We know what's required, what's not. We can guide you through. We do have a lot of contacts as well that we work with, that if we may not be in a position to assist you, we may be able to refer you out. So don't be in your own island by yourself. Reach out. We are a business community. We love interacting with other business owners. We are looking to build a community where it's a safe space where, as business owners, we can come before others and we can share, learn from each other, and we can all grow our businesses together. So, if you are looking for some type of creative funding and you are not sure where to even start, give us a try. Give us a call, send us an email, and let us see how best we can help you. And other than that, thanks for being with us today. We don't want to keep it long today. We are happy to be back and happy to be on this platform. We'll see you again next week on another wonderful Winning Wednesday. And invite a friend. Invite a friend. All
All
right.
right. Bye. Bye for now.